Hey, trading is risky, not appropriate for everyone. Why? You look at past performance, and over time you'll find out it is not indicative of future results. It's a really good idea to stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All that agree, say aye. Aye. Great. Hope you had a wonderful weekend. Hello, hello, hello. My name's Uncle Wayne. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers everything a Forex trader could possibly want. Oh yeah. Currencies, obviously, but also energies, metals, indices, and binary options. I like to use binaries for scalping, but also hedging long-term cash positions. Hoo-ha! We do these strategy sessions every single day. Monday through Thursday, we do it here at Forex.Today, and every Friday at FX Street. Did anybody... No, Igor, they're ramping. They're doing an upgrade. Don't worry about it. How many people here attended Friday's Trade Non-Farm Payrolls Live number 113? Holy smokes! Cool. Well, thank you for following me over there. Appreciate the loyalty. Jason only made 80 pips. Well, you know, you'll get better over time, Jason. Yeah, you might have been sleepy that day. Just yeah. Good for you, buddy. Anybody else do good on the high volatility event-driven strategy, perhaps? Does anyone remember what I did? I don't have a chart from me, but I shorted at the 113. Yeah, I know it only dropped to 112, but you know, like Jason, you know, it was so slow, took so long. Yeah. Hey, Jason, actually, what trade did you take? Felipe shorted at 13, cool. Simon did, cool. Short at the 13. Hey, wait, did everybody do what I did? Oh! Uh-oh. So that's why you got to be careful as a coach. Yeah, Igor's like, I remember you did that. Yeah. So anyways, whatever. It's just another trade, moveon.com. All right, so these videos are archived every single day. First thing that I do when these webinars are over, I upload it to the Forex.Today channel on YouTube. Just to keep in track with what's going on, go over there and click the subscribe button. Takes, I guess I'll do it this way. Takes 1 second. How do we turn the drawing off? Let's see. No, there must be an undo though. Hang on. Fit the window, fit width. Trying to make these webinars better and better and better, which means I'm always trying new things. Trying to figure out how to stop the drawing. Hang on. I guess it's that way. All right. So yeah, YouTube.com. Best ways to do it, just go to Forex. Or just type in Forex.Today, and you'll get any of the videos. Take you to the channel and subscribe. The other thing that I do is once there's a YouTube video, then I go to Forex.Today, which is up here, and I'll show you where the videos are available. So the most current video is always uploaded right here on Forex.Today, right at the top of the home page. But then all the other videos are archived down in here on this part of the corner. Okay? And one of the major benefits of registering, which I'm pointing out here, one of the major benefits of registering is we now have instituted a live chat room for all of the traders that have registered to Forex.Today. So you guys can now chat with each other through the Asian, London, and New York sessions as a team, as a community. Just remember, check the negativity at the door, and spammers go away. My mic is hot and sounding bad. Mic is very hot, very distorted voice. All right, I'm not doing anything different, so let me maybe make some adjustments here. Any chance that that's changed anything? Yeah? All right, good. Thank you for the feedback. It's better to do that in the beginning of the session than the end, right? Cool. Everything good? Everything sound OJ? Thanks, Kenny. Sounds OJ to me. All right, so what's been going on in the world? European stocks opened higher. Hey, what did I say was going to happen last week about Monday? Does anyone remember? I said it about Tuesday or Wednesday of last week. I said today would be what? Stock market rally day, and why? And more importantly, why? Right? Who cares? Anyone can make a guess, but it's really understand why. Mutual Fund Monday. Yeah, baby. The Monday after non-farm payrolls, but also the first Monday of the new quarter. So, again, even if it's a random lucky guess, at least I explained why, and, well, at least I'm right so far anyways. So one of the themes going on here is that NFP was a disappointment. Certainly was. And for those that are degenerate gamblers on Fed policy, they say, ooh, maybe they're not going to raise in October. Well, we already know, well, I've been saying since February that they're not going to raise until December. And then I also want to reemphasize, the only reason I say December, and I only started saying December at one particular point. Because I said back in February, they weren't even going to raise interest rates at all this year. Then Janet Yellen at some point, I don't know, in June or something, said she was going to raise interest rates in 2015. So I said, well, that doesn't make any sense to me. But I suppose if they were going to do it, they would have to do it in December. Because I don't see any reason why now, which is really counter to what you're hearing in the newspapers and on TV, isn't it? I keep hearing experts come on and say, oh, they have to raise interest rates and they're delaying and this is such a bad thing and the Fed is so late and the Fed's causing these problems. I heard one guy today on Bloomberg Radio, he's like, there's just so much unclarity from the Fed. Well, correct me if I'm wrong, but the Fed keeps coming out and saying, well, we're going to raise we're going to raise, like, where's the unclarity? But they're not going to raise now. They need more data, right? So anyways, yeah, and Marcia's going with the same theme here. If Janet Yellen, and not just Janet Yellen, other voting members of the FOMC have said publicly multiple times and recently that they intend to raise interest rates this year. Now, I don't know. I don't think I would, and I don't, but I seem to be the smallest of minority now, where everyone is screaming and yelling at Janet Yellen that she has to raise interest rates soon. Like it's already way too late. And I'm on the camp where raise, maybe next year. How about when Europe gets some green shoots? That could lead to, You know, like one of the things I study at Harvard is a velocity of money. And the reason that we don't have inflation, even though we've increased the money supply, there's no velocity, so we're not going to get inflation. So, you know, who cares about the money supply? So anyways, long story short, I would say put it off to next year, but Janet Yellen keeps saying this year, this year, this year. So to me, if she could delay it till December 31st, I think that'd be a good idea, because maybe December 20th or whatever the meeting is still not far enough away, but whatever. They keep saying this year, that means December to me, but a lot of people are like, oh man, that means not October. Well, of course not October. But like one of the themes I've been trying to share with you guys is like what's logical, intelligent, and what you think, all that kind of stuff doesn't matter. It's the aggregate greed and fear of the market that's important, not logic and intelligence. Because I'm from the school of thought that the market is not always right. The market isn't always smart. The market doesn't always do what's in its best interest. Okay, that's my school of thought. And so the market, if the market wants to freak out, let it freak out. So anyway, so today, risk on. Excuse me. So, pleasure to have you, Wyatt. So risk on sentiment at the moment. Okay, what does that mean? What does this all mean, Basil? I mean, let's just dive into it currency trader wise. What does it mean? How do we make money? How about that? How do we make money? What do we buy? What do we sell? Lots of people typing. Yes, Vikrant's got it perfect. So does Sebastian. So the thing I'm looking for is dump the yen. JPY. So anything with the JPY on the right. So you find a currency pair that looks like that. X, 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 right? And long bomb it is what it means. First and foremost. Then the next question is, what's the USD doing? But that's a whole different question. Okay? And the reason, right? The reason for that is the JPY is a funding pair. So one of the things that you want to look at is buying dips when you're risk on. Now, didn't we talk about that at non-farm payrolls? And how to build a basket and how to stick with it and never take profit and so it's kind of funny. Initially after the bad NFP, the yen pairs did this. Boom. You know what they've done since? We've wiped NFP off the map. But what about dollar pairs? What have dollar pairs done? You're like, I like the way you trade. So anyways, and how about Portugal? Yay! Portuguese stock market up 2%. Good job, ruling coalition. This sounds good. What do you do? Oh yeah, I run like a ruling coalition. It's awesome. Vikrant, right time to corner Kiwi yen? That's up to you, dude. That's your alpha, baby. So anyways, the major FX markets against the dollar are mixed. Cable trading near its lows off of weaker than expected PMI. Cool, man. We're already hardcore short the pound, so awesome. Who's still mentally net short on the pig? KC? Manny? Yup. Anybody else? Guy? Cool, huh? So anyways, that's just going along with what we want to do anyway, so love it. Euro showing some resilience against the dollar. Well, all right. I would not say it that way if it were me. This is according to TradeTheNews.com. I think it's just a little more, you know, couple of things. Those that are biting their fingernails after NFP are still scaling out. But what did I say would happen once that happens? People get back short. So one of the things I discussed at length, I mean like maybe for an hour and a half, because Friday's webinar was 3 hours. So one of the things I drilled home, and some people still didn't get it, but Euro USD was going up, but nobody was buying it. And it just blows some people's minds, which shows that they need to do a little more, you know, effort on the education side, don't they? Because it's going up, so people are buying it, right? No, not necessarily, no. And so I was showing through multiple ways, through commitment to traders report, but also through order flow, and then of course just experience and intellect. Euro USD was going straight up like a rocket ship, but nobody on the planet was buying it. Right? So anyways, what that tells me, and the message I was trying to get across, it's going to go up until it hits resistance and sort of the new equilibrium market price between greed and fear kicks in. And since no one's buying it, then the only direction it's likely to go is back down, because the only people in the market are bears. So it's going up when bears are getting out, but then it's going down when bears are getting in, and there are no bulls. It's bears getting short, bears getting out, bears getting short, bears getting out. So anyways, so one of the things I would look for on a day like this is a giant double top. That's what I talked about on Friday when we were here, right? So 24 hours later, I would expect, you know, sort of a retest of some sort, and then back down. Cool. So today, Baltic Dry Index, of course. PMI services, 945, fine. 10 o'clock, ISM services, big one. Oops, that was supposed to be a check mark. So that one is going to be worthy of a scalp, sir. Sir, yes, sir. Okay, cool. This one, 10 o'clock. Boy, that's too bad. I'd like it to be a little more transparent. So anyways, 10 o'clock, good scalp. All right. You guys want a challenge for super bonus points? Super bonus points? Okay. Today, after 10 o'clock in the morning, Eastern Time, so go ahead and scalp ISM. And later on, around, let's say, the New York lunch after the London close, when the market's a little slow, go to the Central Bank of Mexico's website, download and read the monetary policy minutes. What's going on in Mexico, yo? How does it apply to the United States? How would it apply to global macroeconomics? Okay. Okay. Crop report. Great. And then in the Asian session tonight, Aussie trade balance, RBA interest rate decision, 3 hours later. So obviously the bigger one is going to be that. They're not expected to make any changes, but is there a change in their outlook? Okay? So if you're doing your job well, you're going to do the RBA interest rate decision. And if you're going to be super on the ball, do what most people are incapable or unwilling to do, you're going to read what the Central Bank of Mexico thinks about their economy and global macroeconomics. I mean, there's going to be some hidden gems in there. Like I said, I've found myself surfing their website, downloading PowerPoint presentations that Carstens has given, right? You know the president of the Central Bank of Mexico? His name is Carstens. You knew that, right? So I've downloaded Carstens' PowerPoint presentations completely in Spanish. I don't speak Spanish at all, but I speak money and love. Those are my two languages besides English. And, you know, I can make it work. And Lewis says, what to look for? I have no idea. Just tell yourself you want to be in the 5% of retail Forex traders that trade successfully and make a really good living trading Forex, right? You want to be in that top 5%? So do stuff that the other 95% are not willing to do. Who cares what you're looking for? Figure it out. I don't know either. What do they, so ask yourself, I mean, clearly the Central Bank of Mexico has a huge team of analysts and economists. And they're studying their own economy. They're studying the global economy because it's going to impact their economy. So for example, do you think the United States economy would affect the Mexican economy? Just a basic thought there. Would it? So what's going on in the Mexican economy then? If their largest trading partner is the United States, what's going on in Mexico? Or, you know, is it getting ready to? Are they getting more business from the U.S.? Less business, and why? How's oil prices affecting them? How does that work? Why? Are they talking about it? Where do they sell their oil? You know, and gold and all the other natural. So just like, I don't know. Just read it because that's probably something that the smart money is going to do, and the dumb money certainly is not going to do it, you know, because it takes a little bit of effort. Just do it because it's cool, man. Just do it because you love to do it. Yeah. Jimmy says you can cut and paste it in English. Maybe there's an English version. You know, I don't know. Just be awesome. Do awesome things. You see what I mean? How do you be awesome? You do awesome things. All right, let's get going with the rest of the webinar. Oh! Snap! That just happened. All right. What do you think? Technical analysis today, or would you like me to do COT? Can you explain supply and demand on a chart and when you buy and sell according to that? Supply and demand or support and resistance, Rick? Tech. All right, both. Technicals, COTs. Oh boy, it's a mixed bag. All right, then I'll tell you what. Let's burn through the COT. I'll do a quick version, and then we'll go into the tech. Okay? Okay, yeah, I'll just bang it out. We'll do it quickly. Sometimes I do the detailed version. I'll just do the version that you already know what's going on. But then again, you can do it yourself at any time, right? All right, so anyways, news, COT report. Remember, this will not include non-farm payrolls. Euro, no real change at all, okay? So the net, it's just slightly net bearish, more net bearish, okay? Now, one of the things I talked about at NFP, you see this giant spike in the price of Euro USD, the red line is the price, giant spike all the way to 15. Look at this, less bulls. Wait, hang on. Let's look at the net. Very little change net, and then it came back around. So it just shows even though it's rallying up, there's weakness. But week over week, slightly more bearish, but you know, here it is. Look, again, nobody bought it week over week. Nobody on the planet bought it. Nobody. In fact, slightly less people were long. And then a moderate increase in bears from here to here. That's all we're looking at. So just basically nothing happened, but the nothing happened in the direction that it's been happening. All right, check this out. Net position here. We got all the way to the zero line. So the week before, we were at neutral. Technically at neutral. The same amount of bulls as there are bears. Isn't that funny? Now, slightly more bears again. And remember, this is as of Tuesday of last week, so this is before NFP. Okay. So pig is neutral, but maybe ready to fall, huh? Yen. Almost back to neutral. Price came down last week, dipped slightly below 20. It went down to what, 18 something, but we'll just call it 19 last week. We've been range bound price wise, and you can see even here it indicates a lot of range. And then look at the range here. And we're back up into the range again. Nice. No, I would say no net change. Look at this. Less bears, less bulls. Just everyone's getting cleared out. And that's actually a good thing to me, because what I find is the market moves sideways because everybody's in the same trade. And what you need is somebody to lose patience. So I'll never forget last year, I had built a basket to short the yen, but the yen pairs were not going up. It was a very similar market like this where we moved sideways for like 6 months. And then there's a trader that was on TV. He was on CNBC or on Bloomberg. I actually like his analysis. Gartman, do you know him? Anyways, he came out and he's like, yeah, you know, situations like this, you just got to know when to get out. So he's like, I'm getting out of the yen short. It's too crowded for me. So he got out and boom, I made a ton of money. Like, thank you, Gartman. Just thin the herd, man. Just thin the herd. It was great. So maybe it's a scenario like that where somebody's going to give up. Good. All right, Aussie. Look at this. Tiny increase in longs. Tiny decrease in shorts. Real. All right. So anyways, just slightly move up here. Okay. The interesting thing is price came down. Isn't that interesting? But we know it's stabilized. You know, it's just the 70 issue, right? And also pivot points. Yeah, Guy asks a question, how do you get out of your basket? You know, that's the billion-dollar question, right? So it comes down to you should know based on a calendar when the market is likely to give back, so to speak, or retrace, or even reverse. Things like end of quarters, end of years, that kind of thing. I think the most nervous time of the year for me is right before Thanksgiving, because there's probably a 50-50 chance at Thanksgiving that the whole trend collapses or continues. And I never know which. So Thanksgiving could be fabulous, and I've had horrible Thanksgivings too. What do you expect when the Euro USD this Thanksgiving? I think I just mentioned I have no idea. Yes, American Thanksgiving, ye. Yes. I still don't like, I prefer the Canadian Thanksgiving. Honestly, I complain about American Thanksgiving every year. Like, why do they do it so close to Christmas? Family comes over, you have this big dinner, and then like 3 weeks later, they're over again, having the same big dinner. Like, did we just do it? Yeah, much prefer the Canadian Thanksgiving. Let's take a look at Kiwi. What do you think about the Kiwi? Oh, so Rick is asking a question like the difference between support resistance and supply and demand. You know, the best way to think about that is, you know, there's what I call minor support and resistance, and then there's more of a major support and resistance. And the bigger levels, you know, like for example, retail traders, they mess around with like 15-minute charts a lot, right? Probably the most common. But a lot of bigger traders, institutional traders, they're looking at bigger charts like daily and above. and they're looking at things like monthly pivot points and weekly pivot points, and they're looking at clusters of these things, and they're also trading in the direction of the fundamental trend, which we know most retail traders just don't get, right? So it's a culmination of all of that goes into, let's say, true supply and demand. Okay. Yeah, so just think of it as there's two levels of support and resistance, and you should try to ask yourself every time you're, like one of the things I do, and you know this, I say, are you bull or bear? And you say bear, and I say, good, give me 3 levels of resistance in which you might want to sell. I didn't say sell, that you might want to sell, where there might be a reversal pattern, right? Okay, good, so you go 1, 2, 3. You've identified 3 levels. Now, which ones, now zoom out a little bit, put some more time on your chart, and ask yourself, which one of these are for like day traders, retail traders, and which ones are institutional traders? Like, which ones are just so big, like at the very top of the range, or pivot clusters and psych levels, and they should just be more important. Okay, so you should be able to then qualify the support and resistance, right? Which ones do you think are minor and which ones are major? And the bigger orders, orders from these institutional players are much more likely to be at the major support and resistance levels. Okay. All right, so Kiwi. That's the maximum. Someone asked how far you can zoom out. That's as much as I can get on here. Okay, this goes back, what, 2 years? Okay, so that's the best I can do on this. And for some, that's just hard to see. It takes a long time for this to kick in. Oh, well, there you go. All right, and that's me zoomed in here. So the net change, bullish. Okay, Kiwi versus dollar. Okay, remember, these are futures contracts priced in dollars. Which means there's less people short. And how many people bought it? Not many, but look at the fall in shorts. Oh wait, I just realized it didn't zoom in. Forget that. Good thing I'm looking at the date here. Forget that. Strike that from the record. All right. Almost no change. No, less people long, less people short. So people are just exiting that trade. That market's getting thin. Okay? Maybe good for later. But a lot of this might be people getting out before non-farm payrolls. Okay? Could be interesting. And then kitty CAD. Okay, kitty CAD. Price has gone up. Look at this. Okay. Short positions, about the same. Long. That's a reasonable drop in people buying the CAD, huh? So when you look at like the USD CAD now is falling, we may look at that and say, well, that's simply the US dollar being generally weak after non-farm payrolls. Okay? You see that? The website's designed so you can watch on tablets. Cool. All right. Yeah, so you guys are going to meet up on the chat on Forex.Today. That's really cool. Yeah, really cool, guys. I'd like to see that. All right. Around the world, around the world. Let's try to get these all in the same time frame. Daily, 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 daily. This is hourly too. All right, daily. Daily, 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 daily. All right, let's start with the pig daily. We're in here. What's supposed to happen is it's supposed to tickle the 21 somewhere around this low and then drop. Okay. Little concerned about the 5-8 kiss here. So if I was an aggressive bear, what I would want is a little bit of sideways action, and then the 21 squeezes it down. To remind you, we're on a beautiful path here, and this is it rolling over, eventually heading farther down. And to put it into perspective, that's what we're doing here. Down, up to the 50% down. Now, Fibonacci would tell you, that we're on our way down to 137, which is 1,500 pips below us. All right, well, maybe. We'll see. Okay? But all I'm focused on now here on the shorter time frame is this. Maybe it goes up for a while, and then we roll it over. Okay? And the higher it goes up, the less I like it, obviously. So what I was saying before is, what if it just sort of stayed in the range bound for a day or two, and this 21 comes down, touches this wick, and by then we'll be 2 candles over here, and then it drops. Okay? What I don't want is to have, a full rise, all the way up, and it just gets complicated. But for a bull, on that side, a bull has an oscillator that says get ready. Doesn't mean buy yet, but it says get ready. If you're at support, you can think about it. And then look where we are now. If you follow the thin black line, seems like this was support, and this was support. Okay, and this was resistance. So maybe somebody holds us above the 50 line, or should I say the 150 line? Because where we are now, when I put price on, we're at 151, almost 152. Somebody might want to keep it above 150, right? Well, that's why I have this gray box here. What I'd like to do is bring it down to the 50, to the, the 150 line, 1.50. So maybe it just comes down another 150 pips or so. Yeah, Wyatt, TradersWay is upgrading their binary platform, so it's just going to be temporarily unavailable for a while. I don't have an ETA on it. They just, it's a technical challenge, so. All right, let's clear some of this out. All right, let's kind of zoom in here. So it's a new week, isn't it? Yup. I don't think I can even zoom in much more. And up here, 114 is the predicted high for the week if you're a bull. And 110, not quite 110, 110.50, 110 and a half, is the predicted low for the week if you're a bear. Okay? So if you're a bear, we've spiked up, we slammed into the M3 and it's coming down. But, you know, if I were me, I would almost play this like we hit the R1, which means the S1 at 111.20 is our bottom for the week, and we continue sideways. Ron says, you know, new week, new month, new quarter, so yeah, so maybe that does change, right? So if you're a bear, the way that you're going to want to play this is M3 is the top, so M1 is the bottom, and we head down to 110.50 kind of thing. That's what a bear would hope for. Okay, and a bear is looking at the market kind of like this. Okay, so it just depends. Let's look at it on a smaller time frame now. A lot of a challenge, right? See, right above here is 113. Does the market say it wants to get above 113? No, clearly not, huh? So again, if you had your finger on the trigger in the early part of the European session, you know, that's catchable. Okay? It's only catchable, though, if you're already a bear. Oops. Okay, let's look at the Aussie dog here and zoom in. Okay, so one of the things I pay attention to on the daily chart, guys, is where the 5 EMA is. Because what we're trying to guess is where will the 5 EMA be tomorrow. I know where it is now, but I don't care about that. Because today's 5 EMA is based on yesterday. So where's 5 EMA? So today is predominantly up, isn't it? So if you're a bull, now we're on the hourly chart, one of the things you might want to look at is to today's high, today's low, or you can go to yesterday's low if you want. It's your call. Just for fun, I'll use this one. At some point in the next 12 hours, you might want to look for the retracement and extension. And why would that work? Because tomorrow's 5 EMA is going to move up. Daily 5 EMA. Okay? And you might find it's about here. Remember, it's the bottom of the current candle, so it's about here. And tomorrow it'll be about here. But by the time it does that, price will be up here. Okay? And remember, that is, it's a moving target. Okay, let's look at it back on the daily here. It's a moving target. Let's clear some of this out, maybe. Let's delete that. Let's delete that. Okay. So that's kind of what we're looking at here. It just wicks down a little bit and then boom, up to the next level. What we're guessing is where's this 5 EMA going to be tomorrow? But we need to do that today. What do you think? Yeah. And why is it less bearish? Do you guys see this touch here at the 55 EMA? What does that predict? That the downtrend is significantly slowing down and that we're vulnerable to a double bottom. And is that close enough to a double bottom? Okay. So again, the message here, where's the 5 EMA and where's it going to go? Because we need to deal with tomorrow, today, not yesterday, today. All right, yen yen. Let's do the same thing here. Indicator list, getting rid of the sessions, get rid of the fibs. All right. All right, so are we riding the 55 on this one? No. Are we riding the 21? Yes. Has it been holding price down? Yes. Is the daily oscillator overbought or oversold? No. So we're still neutral. Okay. So continue to play the range. Okay. Continue to play the range. I guess maybe I'll do it like, well, and then I gotta grab those. All right, maybe like that. Make this one a little wider to capture some of those wicks. But right now we're in the do nothing mode. What do you think about the pivots? Well, if you look at what happened last week started high and then down, down, sideways, sideways, and ended the week lower than the start of the week. So the central pivot point dropped down. So technically it's still bearish here. Okay. M3 is 120.34, which is basically where we are now. So if it turned bearish on us because of the daily 21, then we're going to work our way down to 118.5, according to pivot point theory. So if this turns down here, guys, it's going to drop 150 pips. I said, according to the pivot point theory, it looks like 18.5. I would still play it like it's like this is the support. Okay, which means if it wants, it could go up to weekly R1 before it goes down to weekly S1. So that puts it up at 121, and then you dump it. So it's your call. Okay. And kitty cat, what a move there, eh? So let me show you something. La la la. I'll get rid of these things too. Fibs, delete. Sessions, delete. Okay. History. La, la, la. Let me make a little change here. Beep, 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 beep. Huh. Oh, hey, oh, huh. What? Yeah, so this last week was the predicted top for the month. Yeah. Now, what's supposed to precede M4? If M4 is the top, what was the predicted bottom? M2. So this is M2, guys. That's pretty sweet, huh? So anyways, check that out. We hit the top, and how many people took profit, huh? Holy smokes. So, does anybody think the Canadian dollar is going to get weaker in the month of October? This is your alpha. Sit down with your investor. They're going to give you $1 million, but you have to convince them the CAD's going to weaken, right? If so, I think you better get ready, son. First of all, let's look at it that way. Second of all, we're on the M2, which is a launching pad for bulls. Because standard pivot point theory says if M2 is your bottom, M4 is your top. Okay. Okay. So it's sort of like if you're a bull on this pair, and of course risk on would make the dollar go up, and you know, that kind of thing. Oops, did I just kill it? Did I just kill it? No, good. Then, you know, maybe, baby. Hey, boo-boo. Maybe, baby. Now, where do you sell if you're a bear? Ask yourself, where's today's 5 EMA going to be tomorrow? And you know what it says to me is that it needs a green candle before it makes red candles. Doesn't it feel that way? Like a bear actually needs the bulls to buy it. Oh, did I do the S1? All right, you're right. Sorry, I misspoke then. Then it's going to be here then. Come on. Got me zoomed out so far. Okay. But you see, like that 5 EMA is so far away that we need a higher high before it turns and makes a lower low. Isn't that amazing, huh? It's almost like it needs to go to the monthly central and then drops. It could go up for the rest of the week and then down if you're a bear on this. So, I don't know, just be careful. Do you sell at support, guys? No. So bears, be careful no matter what. But if a bear can't sell at support, because it's support here based on price action, right? Where are we now price-wise? 131, so maybe that's a psych level. It's a monthly support pivot. Maybe it just is at that point where maybe it just can't fall farther at the moment. Now, if you change the time frame, okay, let me do this for you. I'm going to change the time frame. Does this look bearish to you? If you're a bear, would you say, hell yeah, let's sell another one? Probably not, right? It's pretty oversold, and it's at a key cycle level, but it's also at a monthly pivot. Okay? But on a 15-minute chart, it does say sell. It's fractal geometry. This is where some people get confused, right? So what do? You sell it into the bottom and then buy it off the bottom. And the 55 is confirming that, isn't it? Hang on. Let me check something. All right. It's funny on USD CAD 15. USD CAD 15. All right. I have it touching on a different platform. Let me check that. $55 exponential close. Huh, it's interesting. I have it touching on a different platform. Hang on, I gotta stretch. Oh, too many hours in the chair, man. So anyways, what this might be suggesting is down, and then what? Trade the double bottom if you're a bull. Okay. Now let me ask you something. Do you think this, at least a hesitation for the bears, this bearish hesitation, do you think it has anything to do with the monthly support pivot? Or do you think somebody just didn't want to go down to 130.50? It stopped 12 pips away from the midpoint cycle level randomly? Or is it specifically because of the S1? Nice, huh? So let's mark this one. Okay, S1. So that's monthly. Okay, let's mark this. How about weekly S1? You think it weekly and monthly? Yeah, well, all right, hang on. And now let's do it again. Daily. So we can play it here. Daily S2. Seems pretty close, huh? Four-hour pivots. Four-hour M1. Four-hour M2. So someone might say, as a bull, they're going to look for a reversal pattern somewhere in this zone. Because you have monthly, weekly, daily, and four-hour pivot cluster as support. So if you were a bull on USD CAD, you'd get ready. Is that neat? Another way to look at it is like this. Okay. And one of the things I look at here is this. I'm looking at psych level, weekly S2, weekly S1, midpoint psych level. So on this time frame, I don't say buy it, but maybe at the bottom, if we're down in here now, and this gets oversold, why? Because the hourly says get ready. So that's how I play that. I look at this. Now, this is bearish, okay? So let me preface all of this. If your alpha, your analysis, what makes you smart and intelligent, if that says you would rather be bullish than bearish, then you got to pick your time frames wisely, or pick your entry wisely. Nothing here says bullish. Nothing. So if you're a bull, you got to be very careful how you tiptoe into this. So a reversal pattern at a double bottom is one thing. But you know what the best way is? That it does this. Let's say it comes down. Then what is it going to do? It's going to hit the 21, maybe tomorrow. Then what is it going to do? The 21 is going to be in control, but you think it's going to reverse, so it's going to come down triple bottom. That gets some more bears out and some more bulls in. That gets us to the 55. The 55 is then going to hold, and it's going to come down to here. Right? And there won't be enough bears, and we'll kick it in up to here. So there's a lot going on. So this might be next Monday's long. Okay? Now, to be conservative, if I was just looking at this with no fundamentals whatsoever, I don't have a fundamental filter, I would sell the hell out of this. 21 is in control, price is below the 21, I'm bearish and aggressive. All else being equal. Understand? So Felipe says it's tough because blah, 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 blah. Don't even talk that way. Don't even type that way. It's not tough. You just simply make a decision. And if you are bullish and you look at this and there's nothing bullish about it, then the proper thing to do is just leave it. And what I'm drawing here on the right, that's when you need to decide, okay, I've been bullish, but the market's been bearish. So I need to wait until the market turns bullish, and that's a bullish reversal pattern. So now that it's done a 1, 2, 3, now I'm going to start building my positions long again. Does that make sense? You know, play it smart, right? Do you need, if you're a bull, do you need to be in on this early double bottom? Do you need to be the first trader in? Let me tell you a little bit of a quick story about being the first in. One of my previous careers was I was a venture capitalist. I've personally made over 100 investments as a VC, and my team of 5 other investors did about the same. So, you know, read a bajillion patents and all that kind of stuff. And before that, I was a successful entrepreneur in the Silicon Valley and helped raise money for other startups even before that. So, interesting thing about the first mover, the team that develops some radical new technology that is just better than everything else. You know, when everyone else is using dried leaves That's the industry standard, and then you invent toilet paper, awesome. But here's the thing. When you develop a radical new technology, it's going to be quirky, and it's going to be clunky, and it's not going to work to its maximum effect because you haven't had a large data sample of millions of people using it and finding its strengths and weaknesses and then improving it, right? Also, very often when a new technology or service comes out, you have to spend a lot of time educating the public that they even need it. I mean, it takes a long time to get the better way adopted. It takes a lot of time, and a lot of time means a lot of money. And the first company that does this usually comes in, spends all their time and money building the product, educating the market, improving the market until they're all completely out of money. And then someone else comes out with the same idea, boom, with fresh money, and they basically learned from the first mover. So usually the second mover makes the most amount of money. The early adopter just invested a whole bunch of time and money just to prove the concept, and then all of a sudden, boom, lots of copycats come out and just do it better right off the bat, having not invested the time and money. Okay? So Forex is similar. The first person in the move of the new trend usually doesn't make any money. Oh, they're the rightest. Oh, they saw it. They were in it first. But usually on the long run, it's not a skill that you actually want to develop, because being the first one in a change of trend simply means in some way or another you bet against the existing data, which means you are a degenerate gambler. I can't fall any farther. I'm going to buy this. Well, it can fall farther if it wants to. Not a problem. And you're certainly not going to hold the market up. So therefore, even if you're a bull here, and even if you're right, even if it does double bottom, there's no glory in Forex, so who really cares? Okay? You understand? So if you're a bull, it's over here. It's the same price that we're at right this second, right? But maybe you want to buy it next week if you're a bull. Okay? Does that make sense? You don't have to be the first guy in because you're the smartest. Yeah. That's not how you get paid in Forex, is it? So why don't we regroup tomorrow, and we'll continue with our technical analysis of the foreign exchange market, but we can also do the commodities markets and stuff like that. How does that sound? Yeah, Felipe says you got to be in when momentum comes in, and for that we need time for the bears to get out, and we need time for the bulls to get in. And most often, if you were the first one in that battleground where the bears and bulls have to fight it out, what happens is it goes up and down, maybe 100 pips over the course of 3 or 4 days. It might go up 100 pips, down 100 pips, up 100 pips, down 100 pips. And your 30 pip stop is just not going to last. Right? Regroup means we'll meet here tomorrow, same time, same place. Okay, Igor? So peace on earth. May the pips be with you. May your profits be above average. And thank you very much for being on my team. I really do appreciate your loyalty. I'll see you tomorrow, and the next day, and the next day, and the next day. Cheers.